A weekend gathering of G7 finance leaders, though, could expose a rift on issues ranging from currency and fiscal policies. It's likely to quash Japan's hopes of mustering support to rein in its strong yen. That, of course, is damaging exports and the Japanese economy. Well, let's talk about this and more with Marshall Gittler, Head of Investment Research at FXPRIMUS in Cyprus. Before we come on to the G7 and Japan, Marshall, we just want to get your thoughts on oil. Do you get a sense that this long-awaited balancing point is upon us, or could we see more bumps in the road for the industry in the near term?
Well, yeah, I think the bumps in the road is the direction I would think it's going to be heading in. One of the main things that's supporting the oil price right now is disruptions in Nigeria. They've had a lot of terrorist activity that's knocked 40% of Nigerians' capacity out. That's just not normal. Eventually that's going to be repaired and that's going to come back on stream. Plus there's an idea in the oil markets that's called high prices cure high prices. As oil gets over $50 a barrel, a lot of the shale oil producers in the U.S. are going to find it profitable to open up those drilled but uncompleted wells. There are about 4,000 of these in the U.S. They can just start turning the taps on whenever they want. So I think $50 seems to me to be quite high enough for the oil price. I don't expect it to go much higher than that.
Okay, and Marshall, just looking to this G7 meeting and Japan, the rising yen a problem for Japan. Is any compromise foreseeable?
Well, first off, I think they're just a bunch of whingers. I think they just focus on dollar-yen, which has been rising recently. But if you look at the real effective exchange rate of the yen, it's historically still at a very low level. And if you look at purchasing power parity, it's still an undervalued currency. They're just focused on this dollar-yen range. And the trade surplus is certainly quite healthy, so it doesn't seem to be affecting them that much. As for the G7 will probably come out with some anodyne statement saying that they prefer a stable exchange rate. Nobody can argue against stability. And then if dollar-yen goes down, if the yen strengthens, the Japanese will say, oh, we want a stable currency. We're just intervening to stabilize the currency, failing to point out that they never stabilize the currency when it's weakening.
Let's talk about sterling, Marshall. Obviously a time of almost unprecedented uncertainty for the British pound, given the unknowable factor of the vote on European membership coming in June. We're seeing the cost of hedging against further falls in sterling soaring. But do you see sterling falling any further ahead of voting day, or is it going to remain within this range?
Well, I think what may be happening is people are moving their bets from the or their hedges from the spot market into the options market. As the odds of Brexit recede, they've sold sterling, they're buying it back, but they still want to have an insurance policy, so they're putting on the hedges. That's why the cost of hedging is rising, but cable is rising too. The pound is strengthening as the bookmakers are making it, moving the odds to be more likely that they vote remain. So I think sterling actually is on a run right now, and I think it could continue to rally as people take off their spot trades and move it into the futures, just hedging against the possibility instead of betting against the possibility of a leave.
Okay, Marshall Gittler at FXPRIMUS, thank you very much.